Inflation, as in the increase in the monetary supply, is certainly on an uptrend. Deflation, as in the value of particular assets, on the other hand, has been on a downtrend. There seems to be a pattern here. If it's something that would add to your wealth, it's declining. If it's something that you need to buy regularly, such as food, it's becoming more expensive. I believe the bankers aren't the ones getting the short end of the stick. You came here for the truth, so let me unveil that for you. Today we are going to talk about the ECB, central banks, and everything interconnected. This is a short video that I just wanted to get to for today. And the most important article here is Draghi, ECB, has plenty of instruments to boost inflation. So in the eurozone, they have this condition, which is different in some areas, some crises that we've seen in the past where their inflation is too low and they are experiencing a deflation in many ways. The ECB head says the eurozone's monetary authority has plenty of instruments. It's too low right now, their inflation. And he said that the determination and the willingness and the capacity to act to deploy these instruments, all this is propaganda, trying to ensure the markets that everything is going to be okay. Don't take out your money. We need it. We can't print that much money. A day earlier, the bank left its key interest rates and bond purchase stimulus unchanged, but it indicated that it would look at more stimulus at its next meeting. So it's actually saying that, look, the next meeting in March, we may actually encounter more monetary easing. The US calls it quantitative easing, but whatever you want to call it, it actually doesn't really matter. What matters most is how much the monetary supply is changing by. Is it declining? Is it rising? And we see they're doing no different than what other countries are doing, whether it's Japan or the US. They're printing currency. So let's look at this here as you see historically what they've done. The situation, the ECB began buying government bonds in March 2015, 6 years after the US embarked on QE, as the region's fragile recovery lagged the rest of the world. So the asset purchase program was worth about $1.2 trillion. In December, it extended the planned length of the program as inflation remained far below the target. This has to continue out for the foreseeable future. The US right now is not publicly, at least, engaging in any QE, but it has to at some point because we have seen that there hasn't been any increase in the stock market other than temporary fluctuations since the QE3 ended. So if they, just like the ECB and the eurozone, if they want things to rise, they'll have to print more money. That's the only solution at this point because they're not willing to let it crash. This is the monetary base. So think of this like all the currency in circulation for the US. And you can see this, well, look at it another way. This is what the Federal Reserve has printed. That's actually a more accurate way to look at this chart. And they have in this chart, is a few years old because it's from my book, but you're looking at 3 trillion here, and then you look at the more recent statistics which go over 4 trillion, and it continuously expands. There's no reason to believe that this will ever shrink, at least until something major changes. But what we have here is a continuous increase in the amount of money that was printed. But even though they've printed trillions and trillions of dollars, nothing's been fixed. And they'll continue to do this because that is part of their plan. This is something a little different. I found this to be very important, wanted to bring it to you. Venezuela, Congress nixes Maduro request for emergency powers. This is a little frightening to me. Maduro had proposed an economic emergency decree that would give him expanded authority for 60 days. Check this out. I had no idea this was going on. The IMF estimated the inflation rate this year will top 700%. The last estimate I saw was 63% a few months ago. So it goes from 63% to 700% in a short period of time. When people think that things don't change quickly, look at this. Practically overnight, these things are happening. Look at the people in the long lineups for basic essentials within this country. This is something that could happen in any country around the world. This is very important to note. And then last but not least, a little bit of the police state here. NYPD, we will arrest you if you're on the road. I think this is a little bit extreme. I do understand that they want to keep everybody safe, especially when you have good people, whether that's the paramedic services, whether that's the firefighter services, and dealing with, tragedies that do occur on the road. It really is something terrible. But to institute a travel ban, I think this is, a little extreme. You should advise people not to go on the road. And I do believe that people who are on the road, perhaps they should stay home. But what if it's a very serious situation? What if you had to get to the hospital, for example? What if you had a very serious appointment that you needed to get to? You can't, because they instituted a travel ban. Now, this may be, something you agree with. Yes, they should have a travel ban. But what if that extends and expands and people start getting used to travel bans? This is the tiptoe effect that worries me. Not just this incident here, but it's that tiptoe effect. Maduro wanted 60 days to fix everything. That's not going to fix anything. Giving you more power, not going to fix anything. And that's what's frightening to me. Not just these situations, but the tiptoe effect that they have. If you found this video informative, please give me a thumbs up. Last but not least, if you found this video informative, you'll find my book, The Money GPS, even more informative. You can actually flip through the pages of the book. If you go over to Amazon, they have this look inside feature, which allows you to flip through all of the pages of the book to see if you like it.